Welcome back. You're still tuned into Market Fatafat, and this is a show where we discuss all the stocks that are buzzing in trade today. And on the technicals, we are now joined by Mr. Vikas Jain, Head of Research at Reliance Securities. Vikas, thank you so much for taking your time out and joining us. First up, GAIL, that's the stock that you've picked up for us today. Tell us, what do charts indicate?
So look at the GAIL, the stock is just moving sideways in a particular narrow range. It's been a low beta stock, and the way the broader markets momentum is being up, we believe GAIL should see some strong amount of upward breakout above the 200-day average, because the stock is witnessing strong amount of volume and price action. No doubt it is trading in between the medium term and the long term averages. So weekly charts candle suggest an inside range breakout, and the stock could give a sprint trade in the next few weeks. So we would like to recommend GAIL from the current perspective for a high target of near to 222 to 225 levels.
Right, moving on then from GAIL on the charts. Kanishka, you've picked out banking sector. Tell us, we all know the news on the banking sector. Do elaborate for us and give us some color on the banking stocks and how they are outperforming.
That's right. As you mentioned, banking stocks are in focus on the back of the RBI policy action that has come in on as you've mentioned earlier. RBI has cut the benchmark interest rate by 50 basis points today. Now that marks the third straight rate cut by the central bank, following two previous ones in February and April. Now with this, the repo rate now stands at 5.5% from 6% earlier. The standard deposit facility rate and the marginal standing facility rate, those have also been adjusted by 50 basis points in response to the repo rate cut. Now with this, the MPC has now cut interest rates by 100 basis points since February this year. Also, the big surprise came in with that 100 basis points CRR cut that come from the RBI. Looking at how the bank stocks have reacted to these rate cuts, Nifty Bank, if you look at it, it's up over 800 points in trade today. SBI, it's up about 0.5%. HDFC Bank seeing gains of 2%. Axis Bank, that's up about 3%. Now, relatively smaller banks, they are seeing more rally. RBL, for instance, is up about more than 5%. IDFC Bank, on the other hand, it's nearly 7% higher.
And financial services and several other rate-sensitive sectors continue to be in focus today on the back of that RBI governor's action that came in earlier this morning. But let's just focus to commodity stocks then. Balrampur Chini, that stock is in focus today on the back of an INCRED report where they've maintained their reduced stance in the stock, but they've gone ahead and increased their target price to 521 versus their earlier target price of 261 rupees per share. They say fourth quarter FY25 results were largely in line with what the street was working with, but valuation swings require an approach, and valuations continue to remain a concern. They say PE multiple ignores uniform input costs across sugar and ethanol, and PLA gross margins continue to remain a key driver. Remember, PLA is the new segment that the company has entered into, and the margin profile and profitability profile of this segment will something that the street needs to watch out for. So Balrampur Chini, on the back of that INCRED report where they've gone ahead and increased their target price, the stock is in focus today.
All right, that's Balrampur Chini in focus. But coming to you, Ravinder, you picked up Blue Star for us, another brokerage candidate. Tell us what is the brokerage saying?
With a note on Blue Star, and they have given a hold rating, and they have cut target price to rupees 1712 as compared to earlier price of 1828. They say that the early monsoon dampens REC segment, and FY26 recovery hinges on festive season. They say the REC demand declined 15 to 20% year-on-year basis for the industry, but the Blue Stars posted a 5% growth. May saw a 15 to 20% drop, and June is expected to wash out due to early monsoon. And the management now guides for 15% year-on-year growth for REC in FY26, which is down from 20%, driven by festive season and rating change in H2 plan to cut FY26 and 27 EPS by 6% for both, valuing UPC at 50 times and EMP at 18 times for FY27 EPS. So and the stock is not reacting negatively, and stock is up approx 1%.
All right, moving on then to the next set of counters that are in focus today, and that's Muthoot and Manappuram Finance. And this is on the back of the fact that the loan to value, or the LTV of small loans of up to 2.5 lakh per borrower will be revised to 85% from an earlier 75%. including the interest component. Also, further, there will be no credit appraisal required for such loans. End-use monitoring will be required only for loans seeking a priority sector benefit. Now, the RBI had observed earlier that while the PSU banks were following the 75% LTV norm, other lenders like NBFCs were lending up to effectively 88%, including an interest of 18%. So on the back of that, these two counters are in focus today. In fact, for an example, if the value of the gold is 1 lakh rupees, instead of now 75,000 rupees, a sum of 85,000 rupees can be disbursed with the revision in the LTV. So on the back of this, positive news coming in for gold financiers. Muthoot Finance and Manappuram both are in focus today, trading upwards of 5.5%.
LTV to be revised upwards, and that is the reason both of these stocks are gaining in excess of 5% today. But let's also talk about Bajaj Housing Finance. Rajesh, tell us where do you see the stock headed from here on? Vikas, that question is for you.
If you look at Bajaj Housing Finance, the stock had a stellar listing. It got peaked somewhere near to 185-188 levels. Since then, the stock has witnessed a corrective action of 38.2% retracement near to 114 levels. And since that, the stock is inching upwards. It is trading in a particular narrow range, with higher double bottoms on the charts near 215 to 117. And with the credit policy in the offering, the revised interest rates would be on the lower side. We'll see huge amount of business jetting through, and Bajaj Housing Finance remains a preferred technology-level fintech pair. So the stock is poised for a strong up move from current levels. We may see a higher level of near to 145 over the next few months.
Alright, moving on then. The next counter, Kanishka, Tata Motors is the name that he picked out for us. A note by JP Morgan. Tell us, what does the note say?
Right, JP Morgan has actually downgraded the shares of Tata Motors to neutral from an earlier rating of overweight. And this comes on the back of new headwinds that have emerged for the passenger and commercial vehicle manufacturer as per the brokerage. Now, it has also cut the target price of Tata Motors to 740 rupees from 1250 earlier. The brokerage has highlighted tariff risk and aging portfolio in this unit, that is JLR, along with muted industry growth and market share challenges in India, both for the commercial as well as passenger vehicle segments. These are the new headwinds that JP Morgan is spotting for Tata Motors. But despite this commentary, which is largely negative for the company, the stock continues to trade in green, but largely around the flat line.
Okay, so that's the news why Tata Motors is in focus today, but we need to slip into a very short break on that note. We'll discuss many more buzzers on the other side of the break. We'll also get you some more technical ideas, so stay tuned.
Welcome back. You're tuned into Market Fatafat, where we are getting you all the buzzes in trade today on the back of news flow or on the back of technical charts. Let's get going then. Coming to you, Vikas, on the charts you've picked out Godrej Properties for us, one of the high flyers in trade. One of the top sectoral gainers. From sectoral gainers, Godrej Properties is up in a way almost 14% in trade today. Of course, on the back of that repo rate and the CRR cut, the entire real estate basket is buzzing. But even in the last 6 months, odd months, Godrej Properties has been an outperformer. And today, of course, they've given a clear up move, a strong up move. Do you see this momentum to continue? Really, it is headed towards its 52-week high. Thereafter, do you see this steam continuing?
Look at the real estate space. Continues to look good in Godrej Properties being a pan-India player. The stock has consistently moved higher. We have recommended multiple times near to sub 2000-2100 levels, so we remain positive on the stock. We believe the stock could move further higher, inch upwards near to 2550-2600 levels in an immediate basis, and that we could see some amount of consolidation post-dash trade. So 2600 could be the probable target on an immediate basis in terms of the overall numbers.
Okay, so we could see levels of 2600. The stock is up a whopping 7.5% in trade today. But let's also put the spotlight on Rallis India. Rabinder Kotak Securities has come out with a report, and the stock is sitting with a decline in an otherwise strong market.
Kotak Security has come out with a note on Rallis India, and they have maintain the sell rating with target price of rupees 230. They say the Rallis India FY25 annual report offers plenty of incremental data that provides a closer peek to its performance, and amid a challenging industry environment, the company has made several changes to its senior management and is investing to reinvigorate the product portfolio, and company expects continuous price and margin pressure for generic products but projects volume growth in second half of FY26. They say that the management estimate that the insecticide market in India fell by 3% in FY25, whereas herbicides and fungicides grew by 5 to 6% and 2 to 3% respectively. Kotak think that the stock has run too far ahead of any improvement in fundamentals. So back of this, stock is trading in red and stock is down approx 0.5%.
Alright, moving on from Rallis India, Vikas, coming to you. REC is the name that you have picked out for us. Tell us, what do you see on the charts for REC? It's again a counter that's up and away 3% but it has been in a long corrective phase before this. In the last 6 months, it has been correcting. But tell us on the charts from here on, do you see a breakout happening for REC?
The stock has been trading in a narrow range. Today the breakout has happened with sharp volumes and it is crossed its 100-day average. So particularly with the infrastructure financing being taken in play and the other NBFC parts would see strong amount of outperformance with the rate cuts, we believe REC has been well pretty poised. Plus the company has also done a complete FFO, so the stock is on a strong up move. We believe the stock would first potentially test near into its 200-day average of around 465 to 480 levels. So we remain strongly positive on the name.
Okay, so positive view coming in on REC, but Central Bank of India, Kanishka, the stock is in focus on the back of an acquisition, I believe. Tell us more.
That's correct. Central Bank of India has announced the acquisition of a 24.9% equity stake in Future Generali India Insurance Company, as well as a 25.18% stake in Future Generali India Life Insurance Company. Now, this move marks the bank's formal entry into both life insurance and general insurance sector. The transaction has received all necessary regulatory clearances, including approvals from the RBI, Insurance Regulatory and Development Authority of India, and also the Competition Commission of India. With this acquisition, Central Bank of India will now be classified as a promoter in both these companies. The stock, if you look at it, is down more than a percent today, despite the gains that we are seeing in its peers.
Okay, yes, so the stock is sitting with a cut of over 1%, but let's also talk about Bharti Hexacom, another counter that is losing in an otherwise weak market. In fact, the stock is down nearly 3.5% as we speak. Motilal Oswal has downgraded the stock to a neutral versus the buy. The revised target price now stands at 1900 rupees per share. They believe that the valuations are expensive, risk reward is not favorable, execution remains robust with strong premiumization, but valuation continue to remain a concern. In fact, they've also said that the government's 15% stake continues to be an overhang for Bharti Hexacom, and absence of board representation and past objections with respect to Indus Tower deal also continue to weigh heavy on the stock. They say they are preferring Bharti Airtel and Reliance Jio from the telecom space, and merger with Bharti could be a structural tail risk. Swap ratio could be unfavorable given elevated valuation that Bharti Hexacom is currently trading at. So on the back of this downgrade that has come in on Bharti Hexacom from Motilal Oswal, the stock in an otherwise strong market is sitting with a cut of nearly 3%.
Alright, with that it's time for us to slip into a short break. Anyway, we'll be back with more after the break.
Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade today. And let's now put the spotlight on the IT sector. Infosys is in focus. Rabindra, tell us what is the news flow for this stock?
Yes, Kotak Security has come out with the note on Infosys, and they have maintained their buy rating with target price of rupees 1780. Management say that the CY25 began with a significant optimism about improvement in the demand in the demand environment, and discretionary spending will be better in FY26 as compared to FY25, despite a lack of improvement in recent months. They say that the IT industry currently does not have any healthy flow of net new deals, and Infosys has plenty of new vendor consolidation deals in the pipeline, a key area of focus, and does not expect any generative AI adoption to be net headwind for the company. And higher discretionary spending exposure market makes Infosys a tad more vulnerable than selected peers in a muted demand environment. So a positive note from Kotak Security, and the stock has recovered approx 1% from day's low to trade in green.
All right, that is Infosys on the back of that news flow. But let's move on to the next set of counters. The cement pack, Ambuja, Ultratech, ACC, all of them are in focus on the back of the cement channel check that Antique has come out with. Now, look, if you look at the industry demand, that is likely to grow in low single digit on a year-on-year basis during the April to May 2025 period. Also, it has been impacted by intense heat in April and unseasonal rains in the month of May. Also, if you look at the price hikes, they have been rolled back. The sharp price hikes of 40 rupees per bag in the south announced at the start of April were largely sustained in April and May, but they were dropped recently to the tune of 10 to 15 rupees a bag in June 2025. Antique's view is that industry is likely to sustain the Q4 FY25 profitability in Q1 of FY26, and the impact of negative operating leverage, fuel cost increase, is likely to be offset by the price increase. Also, the sustenance of these price hikes are crucial to justify the current valuations. So on the back of these channel checks, the cement pack is in focus.
Cement stocks in focus at the back of that, but let's also put the spotlight on BEML. Kanishka, what is the news flow over here? Because the stock is down with a cut of nearly 0.1% in trade today.
That's right. While there is no negative news flow for the counter, it is down, down in trade today. If you look at the news flow there, BEML board has recommended a final dividend of 1 rupee and 20 paise per equity share of 10 rupees each. That is 12% of paid up share capital for the full financial year 2024-25. But like you said, the stock is sitting with cuts largely around the flat line.
That we've come to an end of the show. Kanishka, Rabinder and Vikas, thank you so much for taking the time out and joining us today. But a couple of news flows there before we end this show. A big boost is coming in for defense manufacturing in India. Dassault Aviation and Tata Advanced Systems have signed a deal to manufacture the body of Rafale fighter aircrafts in India. Now, this is the first time that fighter aircrafts fuel stage will be produced outside of France. My colleague Sumita Karir is joining in with the details of the story. Over to you, Sumita.
Indeed, a huge shot in the arm so far as India's defense and aviation sectors, particularly with respect to manufacturing in India, are concerned. Dassault Aviation and Tata Advanced Systems Limited, they have signed agreements to manufacture Rafale fighter aircraft fuselages in India. There will be a dedicated facility that will come up in Hyderabad. These fuselage components include the lateral shells, rear fuselage, center fuselage, and front section. These will be manufactured in India. Now, the first fuselage sections will roll off the line in FY 2028. This plant that's going to come up is expected to deliver up to 2 complete fuselages per month. Now, this is the first time that Rafale fuselages will be produced outside of France, and this is a big boost, not just to India's manufacturing sectors with respect to aviation and defense is concerned, but a huge shot in the arm for India-France ties as well. Dassault CEO said in a communication that was released by the company, and I quote, "This is a decisive step in strengthening our supply chain in India." So essentially, the company is looking at boosting, not just assembling, but boosting our supply chain ecosystem here in India.
Big boost indeed for India's defense manufacturing. But let's shift focus from defense manufacturing to electronics manufacturing then. And Sumita, stay on with us. ED now has learned from sources that Tata Group will handle repairs for iPhones and MacBook devices. The development is significant also because Apple is amongst top 3 when it comes to sale of refurbished devices in India. The repairs will be carried out from Karnataka iPhone assembly campus. Sumita, fill us in with more details with respect to this news, please.
Yes, sources suggest that the Tata Group will be handling the repairs for iPhones and MacBook devices. Remember, this highlights Apple's confidence in Tata's abilities. It also signals the Indian conglomerate's deepening role in the US tech giant supply chain ecosystem here in India. Remember, these repairs that are to be carried out, they are also carried out by Foxconn, which is another one of Apple's supplier. It is already doing repairs already aside of manufacturing its devices in the country. So this is part of a symbiotic relation that supply chain partners have with manufacturers, supply chain partners have with the companies. Overall, the repaired smartphones size market here in India is somewhere close to 25 to 26 million devices that were sold, and Apple is amongst the top 3 in that list of refurbished devices in India. There is a strong demand of Apple in hand-me-downs category. In fact, we're given to understand from analysts that close to 2 to 3 million refurbished market for Apple currently exists in India. So Apple will be building on that already demand that already exists in the country. These repairs, we're given to understand from sources, they will be carried out from Karnataka's iPhone assembly campus. While Apple's service centers across the country can do basic repairs, they would now be shipping iPhones and laptops to Tata's facility for more complex issues.
All right. Thank you so much for that, Sumita. But with that, it's a wrap on this edition of Market Fatafat. Ashish and I will take a leave. Thank you so much for tuning in.
पैसा लगाना है तो सेंचुरी प्राइम क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा